Hi, welcome everyone. Just thought I would share with you, we had a few questions coming through to us via the emails, websites, some clients, some not clients. Just thought I'd summarize. We did do a webinar this morning. If you do want to go through I guess we called it the top 10 questions we're having on JobKeeper. Having said that, we ended up more than 10. We thought there were only 10 at that point. So that webinar is live on our website, but just to really focus in on some of the service entity issues that we're seeing for health professionals, and we are getting those questions coming through. So I thought I'd just quickly record just something a little bit for you guys, just to make sure that we're covering some of your questions. I did only touch on it on the webinar this morning. The slides, however, do have a detailed example from this morning, but also I've just put something together now here for you. So my name's Shannon Smith, founding director of and managing director of Smart Business Solutions based in Mornington. So if you need any further assistance, don't hesitate to give us a call. So what I wanted to quickly just go through with you is service entities. There was some questions around JobKeeper eligibility, and generally the typical service entity around the medical practitioners will either be a markup on costs approach and charge to the health practitioner. That'll happen in some of your medical practices with varying numbers of practitioners in there, or a more common approach does tend to be charging for the services on a percentage of gross practice fees basis. So I'm just going to go through what challenges you may see from a JobKeeper perspective. And there was some latest updates that came out from Treasury last Friday night. Josh put that up on his on the Treasury website at about 9 o'clock. So there were some latest developments. Now, it isn't law yet. It's just what Treasury has I guess put out their views on the services, because there were a lot of questions coming out for services. Now, the reason there were questions coming out for the services is many of you have, with the restrictions that have been put in place, whether it be the dentist only being able to see emergency or critical situations. I know actually that's just relaxed now. A lot of specialists were only able to actually perform, a lot of surgeons perform surgery. It's been restricted. They're loosening some of that, but I know many of you have seen a dramatic decrease in your revenue. So I just wanted to go through. So I'm just going to use our names in our practice. So I've got Daniel does a lot of the medical practitioners. Many of you would know him. So if you had two partners, let's just say it's Dr. Daniel, Dr. Shannon, are partners in a small suburban dental clinic set up many years ago. Relevance of that of just being that it is an existing one. We're registered for GST. Group turnover is less than 1 billion, obviously. That's related to the JobKeeper rules. Now, we have a service trust, and the units in the service trust are actually held by our respective family trusts or discretionary trusts as kind of a partnership in the service trust. Service trust employs 5 admin staff, some full-time, some part-time, no casuals, and 2 part-time dental nurses. Now, I've put in here in this particular scenario, when we're applying the markup, the average markup of, say, I've just put 30%. There's different markups that apply based on labour, based on equipment, etc., but I've just put those through. So if we assume that, now if you have a cost with the markup, and this is the first scenario, which will be the most impacted by the JobKeeper scenario in being able to do that test. So the partnership didn't suffer a significant drop in the turnover during March because they still had quite a bit of business going on, but anticipated the turnover will drop off significantly in March, and we're nearly at the end of March now, by greater than 30% due to some of the restrictions on the operations of the clinic. So the JobKeeper entitlements, what are they eligible for as the partnership or the service trust? Partnership has no actual employees, but it can nominate one partner as an eligible business participant. So it can nominate one of those. So that would be either of those partners as an eligible business participant. But in addition to that, you've got the service trust. It will have a more than 30% decrease in, will it have a more than 30% decrease in the turnover? And that's the big question, because if you're paying a fixed cost markup, it's actually probably not going to have that decrease in the turnover because your service trust is getting a fixed cost markup. So let's have a look at how the service fees are determined in this scenario. So if based on a cost plus markup, you've got reduced fees in the dental clinic, reduced demand for the employees may be stood down, and you've got reduced, in a sense, service fees. The basic test may be passed based on the service fees. What about if the employees are retained. So you've kept those employees. What if the service fees have been paid in advance? And sometimes we do see that scenario. So in managing the cash flow in this particular scenario, we look at the service entity may actually pass the basic test if the service fees are adjusted. So if you do have a drop in revenue and you do drop the service fees, but there can be a situation where you're keeping those employees. So how does the service entity fund payments to the employees? Let's just say the service fee is usually $75,000 a month. And that's required to keep the clinic open, to keep the equipment, the leasing, all of those different parts that you've got in your business operations. We've revised that down to $50,000 based on the reduced income of the practitioner. They're not going to need the services as much. However, the trust still needs $75,000 to fund wages and everything else that goes on. What you need to make sure that you do in this case is update the invoice, the service fee invoice for the $50,000 to reflect the reduction in the service fees being required based on the reduction in availability. I know I was speaking to one of the dentists the other day. They're actually working on a 3 days a week schedule at the moment. So literally that has significantly reduced. If you do have this scenario, the remaining $25,000, if you did need $75,000 into the clinic each month into that service trust, but we are reducing the amount of staffing time and service that's provided, that $25,000 will be put through as a loan. So basically as a shortfall, and it's important that you do that to make sure it reflects what actually has happened and make it a separate cash transaction to go through. So where the basic test can't be passed, and that may be scenarios where we see the percentage of income. So, often other scenarios, that'll be the other option where we might see percentage of income where the medical practitioner pays maybe 40% of their income into the service trust. There may be different timing, etc. But let's just say when we have a situation where the basic test can't be passed, the government announced last week an alternative test in the turnover test. So what they're actually saying is it will apply where the entity provides services of its employees to one or more related entities, and the related entities carry on the business deriving the revenue from unrelated third parties. So what they're actually saying is the test will instead use the combined GST turnover, so by the combined turnover of the actual trading entity or person that's actually undertaking that work, and the service trust as well. So that's a really great outcome because there can sometimes be a bit of a time delay and when we may have seen the financial impact to the trust to make you eligible for that JobKeeper. And that's the one that actually is employing your staff. So even though you may have seen a drop in your name personally, we may not have seen that in the service trust, which is obviously a problem. So this is a great outcome. Again, it's just a view that's come out. It's not law, but it is Treasury coming out with that view. So it'll just be a matter of time before we get that coming through as law. But that's a great outcome for you all from a service trust perspective to really show that, common sense has prevailed in this instance. Another question I am getting from a lot of medical practitioners is also in regards to, are you on cash or accruals? So I've just taken this from my presentation this morning. Basically what the ATO is saying is, and I understand for many of you, there are a lot of the services when you are consulting, you will get paid on the spot, but you also do have your services where when you get your billings maybe from the insurance companies or, government, etc., that comes in, say, end of the month, next month. So there is that timing delay. What the ATO is expecting is that you will use your GST accounting method that you would normally use. So if you normally use accruals, you'll do it on an accruals basis, or you can actually calculate it on a cash basis or vice versa. Basically what they want to make sure is that you are comparing apples with apples. So as long as you're comparing accruals this year with accruals last year, and so you've got the common situation there, you'll be fine on whether you're using cash and accruals, because many of us do run the business on an accruals basis, but we actually lodge our BASs on a cash basis because we only want to pay GST when we've actually paid it. So and many of you also will be even in a refund situation. But what we're looking at for the JobKeeper is they are looking at GST turnover as a means for them to be able to work out what that turnover part would be. So it is a good outcome that they are combining a lot of this income approach. Now, just to introduce our team for those of you that may not have met us before, myself, Paul Cunningham, associate as well, and Daniel McCulloch. Daniel's an associate and he spends a lot of time working with medical and health practitioners. So if you do have any questions, feel free to reach out, happy to help. There has been an extension on the JobKeeper, so don't panic now. It's not due today. It's actually been extended. If you are wanting for April, you can start getting payments from after May 8th next week. But you also have till May 31st now to lodge for your April, May. But obviously, if you're making payments, now also if you're making payments to your staff, you actually need to pay those by 8th of May next week, but otherwise you can apply at a later point. So feel free to reach out. Oops, there we go. Feel free to reach out if you do have any questions at all. This is a bit of a moving target. I actually talked about this morning, you know, you could nearly align JobKeeper to an assignment at uni when they give you when they give you the assignment, and then they tell you there'll be a few moving parts or changes, and then a week later they give you another change and you've already started working on it. That's kind of what we've got with this JobKeeper and the way in which they've brought it out. But anyway, do let us know if you've got any questions. I'm happy to help, and stay safe, everyone. Thank you.